for the viewers that probably don't know what it is, what is hard money?
Yeah, so hard money, I mean, you can look at hard money in a lot of different ways. You can look at it as a really expensive option to buy a house with, or you can look at it as just part of the piece of the money puzzle and the math problem about what makes a deal work. I mean, hard money is there because you don't have time to get a traditional mortgage and or you don't have the cash in the bank to close quickly. A lot of these transactions that I'm funding, I'll get the deal on a Monday because they just put it under contract on Sunday and they need to close on Friday. Unless you have cash, you're not going to be able to close the transaction with any sort of regular loan. So hard money is kind of that hammer to solve the problem of funding it quick. And hard money kind of comes from the concept of like there's a hard asset that you're relying on to be the collateral. And in this case, it's the asset, the property, the house. Because, I mean, obviously I'm worried about you guys as the borrowers, but, I mean, if you guys have a pulse, you have a plan, you're not trying to do some weird scheme to con someone out of money, and you have a little bit of a down payment and a plan for the rehab, like, that's good enough for me. I don't typically, I maybe should, I don't typically pull credit. I don't do tax returns. I'm just more worried about the property, So like you guys are involved in a transaction right now. I think I'm going to get pretty close to the numbers, but I want to say you guys are buying it for like $320. I'm going to do a loan for like $280 or $290, and it's going to be worth like $420, right? So I look at it and say, okay, if Nate and Corey peace out on me, am I okay taking this thing back and doing the deal myself?
Of course you are.
Yeah, and so then that allows me to move quick, right? Then I can say, okay, great. I don't really care about all this other bull crap that a regular lender might want, like an appraisal, and I would operate differently if I was not so intimate with the current market, because I can look at a house because I've done so many and underwrite it really fast. And my investors that help me fund these deals feel comfortable with my process. So the process for me is probably not going to be the same for another hard money lender. My ultimate goal is to make it as easy as possible for the borrower, only secondary to preservation of capital for my investor. Right? So I don't want to tee up a deal for them that's reckless just to make it easy for the borrower. Because you guys have seen, sometimes I'll push back a little bit, right? Like put a little bit of money down, That's not to make you guys feel bad or feel stretched. It's more to just make my investor feel really comfortable knowing that they're getting into a clean deal that they don't have like any optics on other than me saying it's good to go.
Yeah.
Right.
You know what I mean? So I think that answered it. Hard money is a solution that will help you fund a deal quickly. Typically, my terms are a 2-point loan fee, 12% annual interest rate. So the APR on it's like 14%, or 15% if it goes a year and there's an extension fee. So it's not cheap, but it's just another piece of the math problem. You got your purchase price, you got your rehab costs, you got your financing piece. So you just plug that into your model and have confidence that it's there.
Yeah.
And it just needs to get paid back. And I mean, there's certain things that you should look for so you're not borrowing from the wrong person. But otherwise, it's just another piece to the puzzle that that you need to know.